Commodities futures trading has several distinct advantages. Trading in the futures of commodities provide lots of different advantages. We just want to go over a few of those today. Some of the advantages include things like lower prices and market efficiency. What we mean by this is that trading in commodities futures is not a very volatile market. The way it's traded, you're basically betting on the price in the future, either going up or down based on where you buy it now. By doing that, both consumers and investors get benefits. People are able to hedge their positions, and basically this brings down the highs and brings up the lows, and so there's much less volatility. The prices tend to vacillate in a narrow range, and this is actually a helpful advantage to investors and consumers. It tends to bring the price down so that you don't have big spikes in prices, and you also get market efficiency as people can sort of think in terms of what's coming down the road. I think the price at this point in the future will be such and such. I know I'm going to need this much volume, so I need to buy now at this rate to make sure that I'll have it. So both those who produce and those who consume can get an idea of what the cost is going to be, how much they'll be available, things like this, and it helps smooth the process, so you get market efficiency in that. Two, it offers an opportunity for speculation. So you're thinking, well, I think the price will go up or go down, so I'll buy at this point, betting on that particular outcome. And speculation, while not just crazy and all over the place because of advantage number one, there is a chance to make quick profits as it goes up and down. And because there's an opportunity for speculation, this actually draws in investors. The idea that, hey, I think I'll take a risk, I'll take a chance, I'll put some of my money there and see what happens. So the commodities market needs capital investment. This idea of being able to speculate helps attract that speculation, therefore attracts the capital to it. Third, commodities futures trading, the third advantage is support for the credit market. Because of the fact that there's not this crazy volatility, and because there are people looking to speculate, these people need to borrow money. Those lending institutions who provide this money say, you know, this is actually a fairly safe loan for us to make because we're going to hedge, the people making investments are going to hedge, there's less chance, less likelihood of just absolutely losing everything. They are more likely then to extend credit to those looking to get the money in order to invest in the futures market. So there is support for credit markets. Commodities futures markets are hedged usually. The economic security provided by the commodities trading is an inducement for financial institutions to lend money to producers under more favorable terms. Fourth, there is a centralized marketplace provided by the fact that the commodities futures are traded so that producers, speculators, and consumers can all, the buyers and whatnot, can all come together in one place. So the exchange market for commodities provides an efficient and responsive location for the producers, the buyers, and the speculators. They all come together in one place. And then finally, the fifth advantage is there are additional markets then for goods. The commodities market provide a variety of places where producers can sell their goods at terms convenient to their activities. Basically what we've got here is a situation that provides benefit to everyone all around. Those producing the commodity, those wanting to buy the commodity, those wanting to speculate in the commodity can all come together in the same place. They have ready markets available. It gives an idea what the price point will be in the future. There's ready lending. There is opportunity for those who don't really want to use the commodity. They just want to speculate on whether it's going to go up or down so that they might make money. There's a lot of upside to this. Hedged, less volatility. All of these are advantages, and there of course are more beyond this, but just wanted to go over these 5 main advantages to commodities futures trading. If you'd like to learn more about this and related matters, underneath this video you'll see a link. If you'll click on that link, it'll take you to that website with that information. And while you're on that website, you'll also find a link to an ebook that's ready for immediate download.